let's quickly recap what we did in the previous videos about this very interesting strategy as well as very simple strategy, the SMA-Price Crossover strategy here applied on Bitcoin. This is the strategy that we presented in the previous videos, especially on Bitcoin and Ethereum in the time frames daily and 4-hourly. So in this very short video, I'm going to recap with you and to present again the results, especially the equity curves. In blue here, you can see the first one, and I'm going to conclude what I think about this particular strategy before studying new ones in the coming videos. So if you don't know the goal of this channel yet, the goal is very simple. The goal is to construct a portfolio of automated strategies that you can trade using specific rules, and especially here on cryptos, to get the best equity curve we can trading real accounts. So let's get back to the strategy. We enter when the close price here in daily is above the blue line, which is the simple moving average of length that I won't detail in this video. I recommend that you just watch the previous videos I made about how to choose the best SMA period for your strategies. And then we close the strategy here. You can see the green dot, the darker one, where we close the long that we just entered. I recommend that you use the spot market to avoid the funding rate. By the way, this is one thing that we could say about this strategy, is that the time in market is very long. We stay a long time in position, and that's not exactly what we want all the time. But yeah, I mean, this is the first strategy that I'm studying on this channel. This is maybe the very simplest one, as well as the archetype maybe of the trend following category in strategies that we can use in trading. Indeed, using a simple moving average as a trend following model is maybe one of the first models that we can think of. So here in blue, you can see that you would have made about a 40x with quite little drawdown compared to the BTC price in black above, as you can see, with drawdowns sometimes of 80 or 70% sometimes. So here's the first result. You can see the result using another length still in the daily time frame. So let's compare the two. So yeah, you can see the equity curves here, and you can see, of course, that they are strongly correlated positively, but at the same time, especially look at the middle of the blue curve, the blue equity curve, which is the result of the backtest we did here. For the first length, which is a smaller one, we can see that we have maybe an overextension, like a better performance, and for a longer length, it's quite more stable here in the middle. This is one of the subtleties that you can distinguish here between the two. So these were the daily backtests, and now let's look at the 4-hourly. Here's the first one. I like the 4-hourly. Why? Because there are many more trades, and because there are many more trades than what we get in the daily time frame, this is maybe you can build stronger conviction in your strategies like that when you get a certain amount of occurrences, not simply 30 trades, but maybe 200 trades or many hundred trades. So this is the first one in the 4-hourly with length. Again, we studied the length, especially for Bitcoin and Ethereum, on the daily and 4-hourly in the previous videos. So I recommend you watch them to know exactly what length to use for your simple moving average. And the second equity curve of the backtests I made on the 4-hourly still with a longer SMA length. So let's compare the two visually, and smaller length. Longer, smaller here. Bigger length, smaller length. So especially if you look on the left, the result for the 4-hourly with a small length, yes, the multiplier is less far less, like 2 times over this 7 years backtest period here. But yeah, it's not really too much of a problem because it's better than hodling. As you can see, you don't get the 70% drawdown like you would have had on Bitcoin. And again, the number of trades is interesting. So again, one drawback of this very simple trend following method or strategy is that the time in the market is very, very long. You have to hold your long position a long time, and that's not always what we want, and that is something that we could consider a little bit fragile about that particular strategy. So now imagine that you combine both the daily and the 4-hourly in your automated trading. Of course, in the premium member area, I will test continuously multiple simple moving average length and multiple time frames, so that we can make sure that this is the best one at the current time we are trading. Some of maybe 1 or 2 of these variants that you are using may be underperforming, and that's not that we want to close them at once. We can wait a little bit and see if they are performing again. But maybe over time the market is changing, of course, and we have to adapt our simple moving average length. I also believe that this simple trend following system or strategy can be applied to many more assets, not just in crypto, of course. We just have to make sure that we adapt the length, the time frames, maybe per asset, per coin in crypto, and per time frame, of course, and also make sure that we try to capture as much as possible of the rhythms, the frequencies of price movements or price action. So stay tuned to study with me the next strategies I'm going to present on the channel. I see you in the next video. Of course, if you had some good value in these first videos of the channel, I encourage you to hit the like button and also to subscribe to the channel to hear back from me in the next videos and in the next backtests that I'm going to perform. See you and bye.